Imagine an economy that was once the envy of the world, a technological titan poised to overtake even the United States. Now, decades later, it's barely growing. Japan's economy has been stuck in a seemingly endless cycle of stagnation, leaving economists puzzled. Why can't this economic giant get back on its feet? What hidden challenges are keeping Japan from thriving again? Today, we unravel the mystery behind Japan's stalled economy and explore if there's any hope for a turnaround. Make sure to stick around until the end to get the full picture, the economic boom and the burst bubble. To understand why Japan's economy isn't growing, we first need to look back at its rise and fall. Post-World War II, Japan experienced an economic miracle, with heavy investment in infrastructure, technology, and education. Japan transformed into an industrial powerhouse by the 1960s. By the 1980s, Japan was at the peak of its economic power. Its companies, like Toyota and Sony, were world leaders, and its products were synonymous with quality. The stock market soared, and property values skyrocketed. Japanese companies aggressively expanded overseas, buying up prime real estate in cities like New York and Los Angeles. It seemed like Japan was on track to become the world's largest economy. But here's where things went wrong. The rapid economic growth led to a bubble, primarily driven by speculation in real estate and the stock market. In the late 1980s, Japan's central bank, the Bank of Japan, tried to curb this overheating economy by raising interest rates. This move, however, had a severe impact. The bubble burst in the early 1990s. The stock market crashed, and property values plummeted, leading to massive losses across the economy. This marked the beginning of what is known as the Lost Decade, a period of economic stagnation that has extended well beyond a decade. To this day, Japan has not fully recovered. The three main issues facing Japan's economy. Let's dive into the key challenges that have been stalling Japan's economic growth. Three major factors stand out: an aging population, deflation, and structural obstacles. 1. Demographic crisis. The second major factor is demographics. Japan has one of the world's oldest populations. More than 28% of its citizens are over the age of 65, and its birth rate has been declining for years. This aging population presents several economic challenges. An aging population results in a smaller labor force, which leads to reduced productivity and overall economic output. It also places significant pressure on the social welfare system, with a declining number of young people to support the elderly. The Japanese government faces increasing healthcare and pension expenses, further adding to its already substantial public debt. This demographic issue also impacts consumer spending habits. Older populations are more likely to save rather than spend, intensifying the deflationary pressures, which we are going to discuss next. Efforts to address the shrinking workforce by promoting immigration have faced cultural resistance, as Japan has traditionally upheld strict immigration policies. 2. Deflation and the liquidity trap. Japan has been battling deflation, or a general decline in prices, for nearly 30 years. On the surface, falling prices might sound like a good thing, but it's quite harmful to an economy. Here's why. When prices drop, consumers and businesses delay purchases, expecting prices to fall further. This leads to lower consumer spending and business investment, which in turn stifles economic growth. In Japan's case, deflation has become a deeply entrenched problem, creating a vicious cycle that's hard to escape. The Bank of Japan has tried numerous measures to fight deflation, including lowering interest rates to near zero and implementing massive monetary stimulus programs, like quantitative easing. However, these measures have not had the desired effect. Japan finds itself in a liquidity trap, where even with low or negative interest rates, people aren't borrowing or spending enough to boost the economy. 3. Structural and cultural issues. The third key issue is Japan's rigid economic structure and certain cultural factors. Japan's economy is highly regulated, with strict labor laws that make it difficult for companies to hire and fire workers. While this has provided job security, it has also made the labor market inflexible, hindering innovation and economic dynamism. Moreover, the traditional Japanese work culture, which values lifetime employment and seniority, has contributed to inefficiencies. Young workers and women are often underemployed or excluded from the workforce, further reducing Japan's economic potential. Japanese corporations have been slow to keep up with global economic changes, unlike the United States and China. Japan has fallen behind in the tech and digital sectors, which have been key drivers of global economic growth in recent decades. Efforts to revive the economy. Over the years, Japan has taken various steps to reignite its economy. One of the most notable efforts was Abenomics, introduced by former Prime Minister Shinzo Abe in 2012. This policy rested on three pillars: monetary easing, fiscal stimulus, and structural reforms. 1. Monetary easing. The Bank of Japan injected massive amounts of money into the economy, hoping to raise inflation and spur spending. However, despite these efforts, inflation rates have remained stubbornly low. 2. Fiscal stimulus. The government implemented large-scale public spending programs, including infrastructure projects, to boost demand. While this provided a temporary lift to the economy, it also increased Japan's already massive national debt, which now stands at more than 260% of its GDP. 3. Structural reforms. The most challenging aspect was structural reform. Abe's government attempted to open up markets, encourage more women to enter the workforce, known as womanomics, and deregulate industries. However, deep-rooted cultural and economic structures have made meaningful reforms slow and difficult. Japan has also been exploring technological solutions to its problems. It's investing in robotics and artificial intelligence to offset the declining workforce. While these technologies offer some hope, they are not a complete solution to the broader economic challenges. The road ahead. Can Japan find a way out? What lies ahead for Japan? Can the country navigate these challenges and restore its economic growth? The path forward is challenging. Japan will need to enact bold reforms to tackle both its demographic issues and structural inefficiencies. Some possible actions include: 1. Boosting immigration. Relaxing immigration policies to bring in young workers and entrepreneurs could help mitigate the labor shortage. This would require a cultural shift in Japan, which has traditionally been resistant to large-scale immigration. 2. Increasing workforce participation. Encouraging more women and elderly citizens to participate in the workforce could help alleviate the demographic crunch. Policies that support work-life balance, such as improved childcare, paid parental leave, and more flexible working hours, will be essential. Japan must break down cultural barriers that restrict career opportunities for women and encourage a more diverse workforce to fully leverage its human potential. 3. Promoting innovation and startups. Japan's economy could benefit from fostering a startup-friendly environment, streamlining regulations, providing financial incentives, and creating a more dynamic business environment could drive growth. Unlike established corporations that often resist change, startups can rapidly adapt to global market shifts, potentially positioning Japan as a leader in tech and digital markets. 4. Investing in technology. Japan is already making strides in robotics and artificial intelligence to compensate for its shrinking workforce. By embracing and investing in automation, Japan can maintain productivity levels despite a declining population. However, this approach also requires careful management to ensure technological advancements lead to new opportunities rather than exacerbating job losses. 5. Reforming financial systems. To tackle the persistent issue of deflation, Japan needs to continue pursuing monetary policies that encourage spending. However, focusing on financial reforms that target new growth sectors, support small to medium enterprises, and enhance consumer confidence will be critical. This may include revising tax policies to stimulate both corporate and consumer spending. 6. Addressing the national debt. Lastly, Tackling the rising national debt is essential. While some believe Japan's debt is manageable because it is largely domestically owned, others are concerned about its long-term sustainability. To address this, Japan will need to adopt balanced fiscal policies that encourage growth while gradually reducing its debt burden. This may involve reforming the pension system to ensure its sustainability in light of the aging population. In conclusion, Japan's economic stagnation stems from a mix of historical events, demographic shifts, deflationary pressures, and structural challenges. Although initiatives like Abenomics have led to some positive developments, the path to a fully revitalized economy remains uncertain and lengthy. However, Japan has shown remarkable resilience and adaptability throughout its history. By embracing change and tackling these issues head-on, Japan has the potential to reinvent its economy for a new era. What do you think? Will Japan find a way out of its economic stagnation? Share your thoughts in the comments below. And if you enjoyed this deep dive into Japan's economy, don't forget to like, share, and subscribe for more content on global economic and geopolitical issues. Thanks for watching, and I'll see you in the next video.